Okay. Hi there, guys. Second time. So what does it take two? Take two. Let me know if you can hear me. So I'll just wait till I just want to make sure of streaming also. I'll give you that link now. Bobby, fantastic. So I'm going to put up a link also that we stream to at YouTube. Just 1 second. Grab that. Okay. So here is the link for YouTube. So if you're having problems, what I'll probably be trying to do is just push it out there as well. So what I'm just doing is basically streaming through Firefox, which I think was the issue before. So yeah, sorry about that. It's been asking me to do an upgrade, and I just push it aside, leave it. But I think it was starting to have packed the sads with me before, and nothing quite. My computer crashed a couple of times. So it's either that, or I'll be going to the shop to get a new computer very soon if it keeps playing up. Anyway, so what I'm going to go through now, which I was starting to talk about last time, we're going to talk about a trade from yesterday. So it was just on the pound. So I just want to go through the reasoning behind that trade, the price action that we're looking at, and why we bought that. I'll also go through a couple of ASX shares we've got on at the moment. OML, which you'll see is down here. We're long that, and that's I'll just tick it over 89. So we're looking for a run. I'll get onto the intraday charts, but you can see there's a lot of fat on the way up on this one. So actually, we'll just go over these now. Anyone could see there's a lot of room to move. So it's been sold quite hard. There's a lot of bargain hunting come in. It started to hold this level around 60, and we had a pop up to about $1, and we had a pullback till around 70 cents, or just under 70 cents. And that's what we're working off. We're working off that higher low. We're working off the fact that we should, and we could, and should hopefully push up through $1. If not, we've got some fat in this trade already. From 82.5 yesterday, we're looking at best price now 88.5. And we want to see if they can at least, and see what happens if it can push up to about that $1 mark, and see what price does. Does it react up there, or does it fall away? Now, if we look at the intraday it's just starting to push up there now. Well, it's pushing up there on the daily as well, but it's holding that overbought mark. It's holding at higher lows. So we want to see if there's some profit taken that starts to step around 94, 95. We might book a partial. If not, we'll try to let that one run and see if we can break up and through before we book a partial. But it's all about now what happens from here and where our risk is. So that's OML. We've also got NEC, which we put on yesterday. That, look, it's not fair. We're 125. We got in a bit of a spike up yesterday, which dragged us in. It's doing nothing to the end of to the close yesterday, and today is finding a little bit of pressure. But that, you can see the way we look at stochastics going from overbought to oversold. That's selling pressure stepping into the market, but it's consolidating around those highs. So that's not a bad sign. We might have to be patient on that one. And again, if we go back to the daily charts, you can see it's just propped up. We're looking for the same sort of thing. Big sell-off. That first bounce consolidated sideways. We've looked at that secondary bounce off the MAs, which it's doing now, and pushing up to sort of 140, 145, maybe 150 over the longer term. But again, we'll be watching that intraday to see what sort of action pops up and whether we need to book a partial to lock away some gains, or just managing our risk from here on in. So those are the two ASX we've got at the moment. So we're working off, a lot of the setups, what we mentioned on Monday, are off this kind of really heavy selling. It's not traditionally our setups, what we normally look for, but considering that the market's been pumped and a lot of people are expecting this market still to sell off, and even now the ASX popped up 57 points. That's unexpected. This market is still fairly strong, and we've got the global economies coming out of lockdown, looking to ease back into business, get back to business, which is really creating that positive. Now, there's nothing just yet. I think we could find issues now if the number of number of COVID-19 kick off again. If they start increasing, and then it will just go to show that you can't really get back to business too quick. So that's what the market will be focusing on. They're focusing now that obviously we're back to business. A lot of countries are coming out of lockdown and happy to keep buying and putting risk on the table, but that could quickly change. So we've got to bear that in mind. So looking at the ASX stock, a lot have been belted. They've been they bounced off the lows and they're consolidated and ready to run. So if we do get that continuation high in the ASX and the Dow and the futures, all the major indices, the S&P, then we should get some of these stocks start to pop up. But we're not going to be chasing massive gains. It's more about just fine tuning. Normally we offer a weekly and a daily chart when the market was in a bull run, which is back all this sort of period. We're off those larger time frame charts. Now we're having to drop it, maybe an hourly, 30-minute chart for the entries, and just trying to manage it from there. And that's just to make sure that we're taking advantage of this little pop. So that being said, I'll look at the ASX200 now, and what we're looking at on the ASX200. So just bear with me a minute. Got to find that chart. Here we go. So this is the ASX200. We did have a potential short entry on that, and it was negated as the market started. It's still pressing higher now. The key level for me is still around the 55 or 55 mark. So that's the fall away from grace off the highs, the all-time highs. We've had this contraction back up, started to roll over. And if this price action, what we're really looking for, I don't mind if it retests and fails at 55, 55, but what I'm looking for is some form of lower high. I want to see the market start to press down, and then we're going to be going short, okay? And we're going to see if the market can continue down in this zone, at least retest the lows or potentially straight through. If anyone traded through the GFC, that's pretty much what happened to the GFC. The market fell over, bounced back quite strong, caught a lot of bears off guard, which it's doing now. So everyone's talking now. You're either, a lot of people are saying they're sitting in cash. A lot of people are waiting for the sell-off, or they're in short. They've tried short a few times. All they are is foddered, like I said, to get squeezed out without a setup, which is not really setting up now. There could have been a setup here on the ASX, for instance. That push through didn't really go too far. And if you're looking with your stop just above 54.30, you're under pressure now. But I'm looking at more the major. So that's you move down, you pop up, and then we haven't built that lower high. So this is on a small time frame. This will push down, lower high, smaller time frame. This is on a bigger time frame, and that's what we're looking for, which leads to bigger moves. So that's the ASX. Still really just sitting around and waiting. We had a false start. Like I said, it didn't really set up. It just turned around. And normally we have a sell entry, so a sell entry level, if we're going to go short, with a buying exit level behind, so we know exactly where our risk is. Now, if it hits the buy entry level first without execution, without getting short, it just cancels it and we have to reassess. So that's the way we're attacking it, and that's what we're just waiting now to see if there is a setup that's going to play out, and it's got to be below 55, 55. If this market starts pressing high and goes through and holds above, then we're going to have to reassess the whole picture. No, to be honest, what was the CPI number? Let me just see if I can get that up now. CPI 0.3, so it's a little bit better than expected. So a lot of figures that are coming in are better than expected. Obviously, they're expecting them down. They're expecting the inflation to really contract, but it's not. They're expecting 0.2 from, what was it, 0.3, and it's coming out at 0.3. I'll just recap that. Am I reading that wrong? So it was up 0.7 last. They were expecting to go down to 0.2, so drop 0.5, but instead it was out at 0.3. So a little bit better than expected. So that's, all in all, not a bad sign. And that's probably has supported the market somewhat. Maybe people are factoring in, okay, one, the market's going up, the market's looking good, we're over this coronavirus hurdle, and the market's coming out the other end, and we're not going to get hit as hard as what they think, and let's just all go high and jump back into stocks. But that's not going to be the problem. I think problems are still going to come, but we'll see. I mean, if we're wrong, the market goes up, we'll have to start getting into nice setups on the long side for equities again. But for now, it's just trade what we see. So let's get on to, so that was the equities on the ASX200. Let's just look at a couple of setups, or let's just look at the pound, and then we're going to a couple of things where we've got our eye on. So this is a pound. This is a trade from, well, it was early European session. It was going into the European session. We're looking at this. So if we just, I'll drop it out to the 30-minute chart, which is the one we're looking at, and you'll see what I mean. All right, so you can see the price action. So let's just get out of that. I'll get rid of that too, don't need that. All right, so what we're going into that trade, you can see that the market had pressed down. All right, so what it had done, a lot of sellers were piling in there, selling off. The market was getting knocked down quite hard. And then we start to get this rally back up. So it was initially here when this trend down is broken. You don't know what's going to happen at that stage. You don't know whether the market's going to just start trending higher, go sideways or what. And then we started getting this lift. So yesterday we've got this press up here, took out the previous highs, and then we start getting this little flag forming. All right. Normally going into European session, if it looks like a setup here, they'll sort of they end up more traps than anything. By trap, I mean if it looks like a buy entry, they'll trigger it, turn around and sell straight off. So it won't be. It's all it's really doing is dragging in buyers and then squeezing them back out, dragging in buyers and squeezing them back out until the action kicks off. Generally at the start of the European session, and then you start to see the bigger players show their hand a bit better. So that's what we got. You can see the market was looking good here, even up here. I was thinking, okay, maybe this will kick off, but I was just tentative to take that trade, that break of this high, which you can see just through there, and it was just that washout we saw, and it was a bit of a trap, and then it turned around and squeezed back down and retested those lows prior to the European market opening. So what this confirmed to me was a retest and hold of that zone around 124 even, and then it just started to rally sharply, and you do get a lot. The markets will rally sharply and then just continue on. So this is what we're looking at that stage. Market popped up and we had our entry already played out with a stop just below, risk below. So basically what you're seeing is that flag, that contraction down, this level holding, and then it started to ramp up, and you figure, well, if I put it just far enough, I'm not just going to get stopped out or stopped into a trade in a bit of a wash. What I'm looking for is continuation higher. So I want to see it prove itself a bit, at least a bit, before I'm looking to dive in. And it was really that at 124.40 was the entry, was just above this previous lower high. Okay, so once you get the market moving through that previous lower high, you know that the move up is starting to play out nicely as expected. It's not just going to be a trap and then drop again. And we know exactly where our risk is going to be. It's quite wide, but still, it's keeping us in the trade. So what you know that two things: once you get in there, your expectation is that continuation higher. And if it doesn't play out and you turn around and get stopped out, or you get some weakness start to step in, you can at least tighten that exit to minimize the risk, or you can leave it and let it play out, because it could very well get you in, chop around, build a key higher low, and then go. Okay, but you give it a bit of room to move, but you basically know if it turns up there and it comes straight back down and stops you out, you've got it wrong, completely wrong, and that would mean that the highs are starting to fail, and there's going to be some more selling pressure come in, which could lead to another retest of down, 2,300, 100 pips lower. So in saying all that, if you do get stopped out, don't be worried. You're better off being out in the sidelines and reassessing the action with a clear mind than being in with a big loss on your hands, and trying to look for a bounce. Because if you're waiting for that bounce and you don't have a hard stop, there's going to be times where you're just not going to get a bounce and you'll be chasing your tail on the way down. All right, so that was the entry, and basically, later on when it spiked up, happy to take it just below. You can see this zone in here, around that zone at 24.90. We took that partial, and really it was just a matter about letting it ride to see what happened. I mean, that was looking great. There could have been a potential move up to 26 on our hands, so we had our final target just below 26 and tightened up our stop just above entry, 10 pips, which eventually got tagged. So really should not have expected, if it was going to continue on strong, I wouldn't have expected this kind of pullback. I'd expect a shallow pullback, potentially 30% of that move up, maybe 50% of that move up, bounce around, hold another higher low, and then go again, which would have kept us in the play. But instead, it was a deep correction, and we've seen it just spike up again now. But I'm not happy to go long anywhere here. For me, if I'm going to go long now, I will have to see, I want to see it prove itself. Maybe retest that breakout at around 24, and I want to see some good price action before we start to potentially look to go long again. Because I want to see this level at around 124.50 prove itself. And by prove itself, I mean buyers start to step in and prove that they're willing to buy at a higher level. Here's you got a high low here at 124. You got a high low here at 124.20. I want to see a high low confirmed before I start to look for that entry and an expansion up through the highs, and that could potentially take us up to 126. Wait and see. So that was the move on the pound. So what I'm going to look at now, just what's happening to market. So you've got the Hong Kong just opened at 11:15, so 45 minutes ago, spiked up, sold off hard. So you're getting a lot of chop in this indices at the moment. They are stretched, and I'll look at the Hang Seng in particular. in just a minute, but I'll go over. I'm just going to go over the bunds, which anyone trades the bunds, which is the German what do you call it? Bonds, the German bonds, called the bunds, the BUNDS. So we'll have a look at that, and I'm just might touch over yen and the Aussie. That's about it. So we'll just kick off. I'll just get on to. That's it. Here we go. So this is the Hang Seng. So this is what I was looking at prior to the open today. You can see that the market's been pressing down. It's been, that major sell-off, and we had this big grind back up. So we're on the hourly chart here. Just remember, we have sold off. So this could be something that, it's a similar situation to what we just looked at on the ASX200, except it's gone a bit higher and it's gone back up into sort of the previous highs around 124.7, thereabouts. So it's not so much a hard and fast level, it's a zone. But what you can see, that market is still contracting lower. We had a big run ahead of ourselves, and generally when you get that hard move down, it has to spend some time contracting before we look for a potential another leg down. Now, at this stage, nothing's yet proved itself. So for me, if I'm going to go long on a significant, looking for a significant move up, for me, it has to break clear at that level, come back, potentially test it, 124.7, thereabouts, retest it and start to fail. And then, on the hourly time frame, you might want to be dropping it down. I generally look at 30-minute, 5-minute, and then, when you're looking intraday, I could be executing on the 1 minute generally, but looking at that 5-minute swing levels. So for me, I want to see a significant pop up, really to make it hard and fast, clear that we actually have broken through that level, and we've broken out of this contraction lower, and the bulls are going to be in charge. At this stage, you can see the market has popped up and been sold back into. Okay, sold into from the open. So the last 45 minutes, it had a good run up, just clean out a few and drag in a few longs and turn around and squeeze them straight back out again with a move down. So we're yet to see anything concrete, whether this is going to hold or whether it's going to break, because it's trading smack around that zone at the moment. Longer term, if we start to get this little pop up here start to fade, and we've essentially got a level that's been tested probably 1, 2, 3, 4 times, held, and now this will be the 5th time and it's starting to hold, that's going to bring in some bears, and I would expect that to bring in some sellers. So what I'm looking at is this little run up here, break down through some higher lows, and I'm looking for that lower high to come into play, if that makes sense. So the lower high, probably you can bring that in about here. All right, so that level is somewhere around 2405, or 24,050 to be a bit clearer. So if we break through that and then we'll pop up, we're looking for the first pullback to sell into. You're looking for that lower high to sell into, and that could open up, considering the fact that it's failed for a 5th time off that level, that could open up a bigger leg down, and I'd say that would correlate to a short on the ASX200, and I'd say that would correlate to a move down the Dow and the S&P and a bigger time frame sell off. So that's what we'll be looking for there. If not, when we get that pop up, you pull back, you're just looking to buy, and really, on the upside, I would have my risk a lot tighter than what I would have on the downside, because I think the downside is going to be hard and fast, and the upside is going to be a bit of a grind. So it's going to be hard work, but I think that trend could easily continue back up if we get this kind of move up. All right, so that was it on the Hang Seng. I'm going to just go over the bunds. So I think we've never looked at that, and I was just looking at the other day. I thought this was interesting. So we've got obviously a big sell-off. With the market when it collapsed, no one wanted bonds. There's no yields. The yields are going down. The yields are going up. What am I talking about? The bunds were going down. And then we've got this, no one wanted them, basically, if that makes sense. So there was no need to be holding these bonds. Anyone that's holding, looking for that yield, selling out. They were moving into the US dollar, into US bonds. Generally, in times of crisis, they're moving to the US dollar. There's no better safe haven than the US dollar and US bonds. To park your money if you're concerned that the market's going to basically melt down. And that's what you saw, complete meltdown in the bonds. The bunds started to rally, and now we're getting this selling zone. So we can see there's an offer zone here. Let me just get rid of that. So you can see there's an offer zone that started to step in at 173. It looks a bit different on if you're looking at CFDs, it's more of, it's touching that one level, but don't forget, this is the futures contract, the continuous futures contract, and they adjust it for different pricing. So what you can see, obviously, the first lower high come in, we've got a higher low start to press up, selling coming back in below that lower high, but back into that zone. Okay, it's pressed down, we've got a high low fixated there, and then when it's come back into that zone, and we're seeing it's starting to run out of steam again. So you can see that every time it swings up, it gets to that overbought. It's roughly around that same area. So when you're looking at, buyers are stepping in earlier. They're stepping in earlier here, here, and here. Starting to step in earlier at higher prices, but the sellers are happy to keep banging out at that price. All right. So what we can see, sooner or later, that's going to break. It's either just going to break up and wash out a few sellers that built up there, and we're going to get price action. If I can get rid of that, price action is going to drive up, and then we're just looking for, again, the retest and then a run up, or we're going to start to break down, and then we're looking for the same as what we're looking for on the Hang Seng, that first move down. And we use timeframes, obviously, for entry criteria. So you're adjusting your timeframes. If this is we've got an hourly chart here, we might be looking again down to the 30 or 5-minute chart for a bit of a pullback there, and looking to enter on the first pullback when we see the sign of weakness on a lower time frame chart. But again, you want to see that break of the anchor, and the anchor level is really around, this zone in here, 173.40, 171.40, sorry, and that's what we'll be looking for there. Break down the anchor. That's a heads up that sellers are starting to take control. You're probably going to get a reaction back up as you get some buyers just dive back in and sellers just take their foot off the pedal. And as soon as you get that lower high coming in, I think that will really start to drive markets lower. So that's what we'll be looking at in the bonds. I'm biased, obviously, down on that. I expect if this market starts to melt down and roll over again, we're going to get the same sort of reaction, and the bonds are going to head south and see if they can come back down to this major low around 168. 168. All right, so that was it on the bonds. We'll quickly spoken about the Hang Seng, spoken about the bonds. We might just click over on some of the currencies quickly, and then we'll call it a day. There was two. I just want to touch over the yen. We were looking for a buy at this stage. I thought this might have popped up, but instead we've getting this sell-off, continuation sell-off, and we've just broken through a key level at 107. So I expect that's going to bring into a lot more weakness. So there could be opportunity on the downside. Just selling, basically, if it pops up, selling into a lower high and knowing exactly where your risk is. If this is what we're looking at, let's just copy that. We would be looking for continuation. We might extend, back down to sort of this zone. And that could be, with a move down to 104.50, 104.60, just below 105. And if that's the case, there's a lot of room to move on the downside. And it's going to open up some good opportunities, but we'll just keep an eye on that. We're on the hourly chart on this as well, on the US yen. And again, like I said, if you're going to follow it down, you want to see it start to break down, and your risk is just above the most recent lower high. That's it. And we'll look at the Aussie. I don't like to talk about it much, but we're looking for a long in here. Had a long setup here, but didn't play out, and it headed south instead. So it cancelled the actual buying opportunity. And I think it was somewhere through around 61.60 or thereabouts, just below this break at 61.97. Played out overnight, basically when I was asleep, and it just kept going. And it's been some good little setups since, but just haven't taken advantage of that Aussie move on the way up. It's still grinding up, and that's doing well because being a commodity currency, US dollars weakening, supporting some commodities, and supporting, in hindsight, Aussie dollar as well. So that. Not sure. I mean, could find some pressure back up at around the 67 mark, or we could just keep grinding high. But of course, that's going to depend on what happens with the US dollar. If the market melts down, US dollar rallies, you expect some pressure on that, back on that Aussie. But until things change, it's heading its way higher. All right, we'll just quickly look at what gold's doing. I think gold's it could just be starting to work out now. So, not saying buy it now, but this is what we're looking at. Okay, so longer term, the market's obviously pressed up. We've got up to these highs. We backed off, washed out this level here, and it's really, previous low around 1670. It flicked it out and straight back up. And then you can see this high low built. Okay, that's where your entry should have been, working off that higher low and then working your way up and just seeing, managing your risk as you go. It did do that, cleaned out that zone. That would have stopped in a few traders going short with a risk above and turn around and squeeze them straight back out again. The market's pushed up, failed again at these highs around 1740. All right, so we've just had to take a bit of a breather. The market's pressed down. All right, you can see that the price action the steepness of that move down is nothing like the steepness of that move down. So what that's suggesting to me, the sellers are coming in, but they're getting soaked up by some buyers. So that's what I want to see. And this is the zone where if this can hold just in here, that would be great. All right, so from here, if we start to pop up and pull back and hold another high low, you could take a long and look for a move up and potentially through 1740. So this time round off this high low, we could work our way through 1740 into new highs, 1760, 1780 and above. We'll just have to wait and see what plays out. All right, so that's it for gold. I would be biased long just now, really just seeing if we can get some sort of setup play out. I mean, this could easily just chop around here and bang, we go down and we have to adjust. All right, but for now, it's looking okay. So I want to see it sort of pop up, pull back, and if I can work off a higher low, then I know where my risk is and I know where I'm heading. All right, so that's pretty much it for me. Hopefully that helps. If you had any questions or if you had some questions, feel free to send it through to support@tradesetup.com.au and then I'll get back to you as soon as I can. And if you liked the video, it'd be great if you can give us a bit of a thumbs up and spread the word. Anyway, guys, enjoy your day and I'll speak to you again soon.